Hello, subscribers. Welcome to the Fast Profits Daily. I'm Brijesh Bhatia. Nifty is approaching the all-time high. Well, we have seen DAX being hitting the all-time high last week. S&P 500 trending at around 52-week highs now, and Nifty we have seen a high of around 18,881, a shy of 6 points from its all-time high of around 18,887. But one thing is slightly skeptical for me looking at the market scenario is the market breadth has been extreme overbought, and the sectoral indices which contributes or which have the highest weightage over here is slightly lagging the markets higher. Well, if you remember a few weeks back, I have done a video on Bank Nifty when it was trading around 44,300, 44,400 levels. And we have seen Bank Nifty correcting by over 1,000 points now. So I have highlighted the history is repeating into the Bank Nifty, what we have seen between 2018-19. And similarly, between 2022 and 23, the structure seems the similar way which has been going on. And there was a Wyckoff distribution pattern onto the Bank Nifty. Now, if I move on to the sectorial indices, the weights onto the Nifty, before that, let's look at the chart structure of Nifty and why I believe that the bulls are losing their momentum. The bulls are stumbling over here to head higher, even though if we hit markets the new all-time high and surpass 18,087. There are few charts which indicate that the structure is lacking the momentum, lacking the strength over here. So let's start with the first chart on your screen. Again, in the whole video, we'll be discussing the daily chart of Nifty and the various patterns which is been forming. Now, if you look at this red line, it's around 18,887, the previous high, which we hit 18,881 at the current level. So yes, the previous high generally act as a resistance, and a few plus minus points still may act as a resistance zone over here. Any convincing close above the all-time high, probably 18,900, 19,000 levels, the momentum may continue onto the higher side. Till then, there is an hangover of the resistance zone. Plus, if you look at this blue rising channel over here, again the rising channel structure indicates that the momentum is lacking over there. Look at this narrow range happening at the higher levels, and look at the when 18,887 was hit. Look at this rally. There was a swing of rallies over there. Second thing, if you look at this sell-off coming at right at 18,887, the yesterday's session, it was a crucial sell-off opening right at the opening. And if you look at the 887, the similar candle was there. Though this time the candle sizes or the bar size is slightly bigger than the previous one. So any fall onto the breakdown of the rising channel, which is around 18,630, and keeping in mind the previous swing of 18,604. So 18,600 as of now remains the trend change level. If I move on to the second chart over here, and this is very, very interesting, the 45-degree trend line. Now, a 45-degree trend line plays a key important role when the rally continue. It acts as a support every time. But when the support is breached, the fall is slightly severe over here. So if you look at right from around 16,300, 16,400, when the rally started towards 18,887, it was a one-way rally. When this 45-degree trend line was broke down, somewhere around 18,400 levels, we dipped back towards 17,000 levels. This time again, the 45-degree trend line is placed somewhere around 18,600, and we saw a slight downtick as well in today's session, where it has broken down the 45-degree trend line. But yes, the close will be very, very important to watch out. Yes, 18,600, as I said, plays a key important role based on the channel, and now based on the trend line, 45-degree trend line as well. So 45-degree trend line, it's basically one of the strongest trend line in terms of technical analysis. And when this hold, or when there is a breakdown of 45-degree trend line, the rally generally accelerates. So if you even look at the previous, when in December we broke down of the 45-degree trend line, and we saw on the first quarter of 2023 what happened. Markets were underperforming against the global peers. So yes, that could be the possibility now, because we have seen DAX trading at all-time high, S&P trading at 52-week highs, and Nifty just a shy of hitting the all-time high, but yes, lacking the momentum. The third and most important one, which convinced me that there could be a pause to this momentum. Now, being a reversal trader for so long, more than a decade, harmonic is one of the key patterns which I generally follow. And there is, if you look at this black pattern, there is a black swan forming, the bearish structure forming onto the daily chart of the Nifty. Additionally, if I just look at, so basically the harmonics are reversal patterns calculated based on the Fibonacci number, and there are n number of patterns into the harmonic arena. And this is one of the pattern which generally extrapolates to the ratio of around 200 plus percentage, keeping in mind of XN as well as BC. So yes, here at current point in time, I believe yes, the recent high of 18,881 will be a crucial juncture for bulls to take out. Additionally, if you look at the dark cloud cover candlestick pattern formed right at the reversal level of the bearish harmonic, signals that the bears are taking a charge and bulls are losing the momentum. Now, if we look at in today's session, we broke that low of dark cloud cover, and generally when the two candlestick pattern forms and the low is taken out, it means that there is a confirmation of the reversal. So now 18,881, 18,887 or probably 18,900 will act as a major resistance zone over here. Now, even if you remember in yesterday's session, we saw Nifty spot hitting the new highs, surpassing the previous high, but futures was lacking to surpass the high, which is again there is a divergence, a minor divergence, which generally people don't follow, but I keep in mind that when these are not in sync. And remember, we are just a few days away from the expiry, and there could be the premium reduction over there. Plus, generally, but when there is a gap up opening, Nifty and Nifty futures tend to sync with the gaps, and during the day they generally cool off the premiums. But in this case, Nifty spot had hit 18,881 and futures failed to surpass those high. And the most important, the second part, which I am convinced that there is a lack of momentum or the overbought market breadth. Now, this is the Nifty. If you look at the chart on your screen, this is the Nifty 50 monthly market breadth. So I'm looking at month-on-month performance of the Nifty 50 stocks over here. I'm not looking on a daily basis. And right from 2017, so 5-6 years of data, if you look at, every time the breadth goes towards 85-88%, we see a dip into the markets. So there could be a small dip, there could be not a correction of 15-20%, but there could be a dip of 5-7%, which could again take Nifty towards 18,000 levels, probably 17,800 levels as well. But look at this breadth. Even though markets have seen 18,500 to 18,800, this market price is not increasing on a monthly scale over here. In fact, it is dipping from 86-87% to now around 72% in the current month, which is again a sign of I would say lack of contribution towards the high. So generally when these levels are hit 85-87%, Nifty tends to retrace by a few percent margin over there. And I'm not saying that there is a top in place onto the Nifty, but there could be a retracements happening into the Nifty. Now, importantly, as I said, if look at the sectoral play, and if I just look at the weights, Nifty 50%, if you look at the screen over here, so this is Nifty 50 weights onto the sectorial side. I'm not looking at the stock side. So large is contributed by financial, it contributes around 37%, followed by IT, which contributes around nearly 15%, and oil and gas and energy somewhere around 12%. So if I just look at the sum of the top three over here, the weights are around 65%, and if in case markets has to lead much higher, these three index has to, or this three sector has to contribute to the success of the Nifty towards the higher levels. So let's start with this ratio chart and why I'm skeptical that this may lack over here. So I'm instead of financial services, I'm looking at the bank Nifty. Though if I just look at the financial, comparing the Nifty Private Bank, financial services, and PSU, most of the stocks, the larger one, are into the bank Nifty. So that's the reason I've taken a bank Nifty by Nifty ratio chart over here. And if you look at this bank Nifty by Nifty ratio chart over here, we have seen resistance at around 2.4. Now there is a breakdown. The horizontal line, if you look at it, resisted around 2.4, and now there is a breakdown of the rising trend line as well. And this is a weekly chart. I'm not looking from a short term point of view. This is from the first quarter of 2020 to the rising trend line is drawn. We are witnessing a breakdown, which means that bank Nifty will continue to underperform over the Nifty. 37% weights, and if I just look at out of 37% weight, 29% weights, the stocks which are into the financial services, the 29% weights come from the bank Nifty as well. So if this fail to rally over the higher level, if these drag downside the momentum, it may take Nifty onto the downside. Second, if I just look at the IT index, which holds around, as I said, 14.7%, it is trending at a slight major support area, and if bank and the whole rally, right from around 17,000 to 18,000 plus levels, was led by the banking space. Pharma is currently leading as of now, coming back. The short cover rally has been seen into the pharma, and FMCG has led the rally onto the higher side. But yes, IT was one of the laggards into this rally. If IT come back very, very strongly, there is a possibility that Nifty may see uptick, because this ratio chart is trading at the major support level over here. 2019, 18, 19 highs, now the resistance now acting as a support over here. So if in case we breach 1.45 on this ratio chart, I think the IT stocks may continue with their downward journey, and they may pull Nifty onto the downside. The next sector, which holds around 12%, the energy space. Now it is trending in a rising channel formation. Now, interestingly, Reliance holds at around 9-10% into the Nifty, and Reliance has been slightly underperforming the Nifty 50 as well. And if I look at the energy space as well, Reliance holds the highest weightage into the energy basket, and that's the reason we are witnessing, even though ONGC has led the rally, IOC, BPCL, we have seen all the stocks rallying, but Reliance is one which is dragging the energy index onto the downside, or keeping underperforming the energy space against the Nifty 50. But yes, it is currently trading at a major support area of the rising channel. If we breach 1.2 on that level, it may drag onto the Nifty. So yes, IT and the energy space are the two sectors which can hold on to the Nifty 50 onto the higher side. But banking, I think it will be a laggard, and it may drag onto the downside, because 37% holds weights come from the financial services. So yes, this is one of the risk where Nifty could see downside. So as per the harmonic structure, as per the channel structure, and as per the previous high, if 19,000 is taken out, the daily patterns on the daily chart would negate, which I am sharing in the video. Until that, this would act as a major resistance zone. And as I said, I'm not looking a 10% or 15% or 20% correction onto the Nifty, but there could be a retracement for next 30 to 45 days, I believe, before the positive momentum resumes onto the Nifty. So just to sum up, keep a watch on 19,000 levels, 18,800, 900 levels as a resistance zone, and Bank Nifty is the one may drag down to downside. If in case you have missed the video or crash in Bank Nifty, go on to our archives and watch that video as well. I'm expecting Bank Nifty to be an underperform against the Nifty in coming weeks. Signing off, Brijesh Bhatia.